Today, as we have been doing before, I think this is the day 15 session. From the time we started, we have been training on NSE. And the IPO that we are targeting today is Kenya Pipeline IPO, which started yesterday. And it will run all the way to next month, around 19th February. I'll come to all those details. All these trainings are usually free. We don't charge as AIB. Also, I do my own personal training, as you see at the end. I also don't charge. All of them, they are free for you to get knowledge on the market. So today, in the interest of beginners, I'll start with the introduction to NSE. Then we go to IPO, how it works, how you make money in the market. Remember, you're committing money. Any investment you do, you're ideally committing your money into that investment, and you need to make returns. Then at the end, we'll now do the application process. But remember, you don't have to do it today. You have, I think, 1 month from now all the way to February 19th. And if you don't have enough cash to apply, it's not a must you wait until the last day. You can start today with what you have. Then maybe next week you have another cash, you can top up again, add more shares next week until it closes. The offer will close on 19th February. So that is the last day of application. And confirm you can see the screen. I've shared the screen. I don't want anyone to miss. And my name's Peter Chege. I'm the head of product development and innovations at AIB Access. I also handle aspect of marketing and also IT. So that is my role at AIB Access, head of product development and innovations. All the innovations you have seen, they usually come from my department. And that's my WhatsApp number in case you want to reach out later. Can you hear me now? Confirm, Nyabura, you can hear me? Maybe you can also increase your volume a bit. And the rest, can you hear me? Just confirm. Nyambura, now you can hear me? Just confirm. I'm waiting for Nyambura. And I'm, oh, okay. That should be fine. I think it is the microphone that I'm using. But I didn't want to block my mouth so that you can see me. I've had a few clients who have said they also want to see this face behind the usual trainings, which is also good. At least when we meet outside there, even in the office, you already know who you are meeting. So that's my WhatsApp number, 0723384775. Just in case you want to reach out on anything on capital markets. Let me just give it here on the chat so that for those who may drop out early, you can always reach out. I'm always available. Just send the message. Even if I don't respond, maybe at night I'll respond during the day. Even weekends, I'm always available. At night, feel free. So as I said today, I want us to go through Kenya Pipeline IPO application. And with that, you need an understanding of NSE, how shares work, how IPOs work, and how those IPOs transform into shares which trade in NSE. And practically, we do Kpc Ipo application. Then after that, for those who will be able to follow wrong, it's okay. For those who may not be able to follow up today, this video will be available. I will share those recordings. Most of these recordings I usually don't put on AIB Access social media, because as you see, there are some things you may find I'm going outside the regulations. And not in a bad way, but to expose what you're supposed to know as a client, which is hidden behind the market. Remember, brokers are in business. You're investing. But from my side, I usually disclose all the information so that you as the investor, you already know where you're getting into. You don't get into an investment, then at the end of the day, you find you lost. That's why I'm always open. Whatever we discuss here, It's not actually related to AIB. You can apply with AIB for the IPO. If you're in another broker, you have an option to open account with AIB through a digital platform. Alternatively, you can still use the same broker because the link is not unique to any broker. It's for brokers. So let's dive in. For the beginners, let's understand how NSE works. NSE is a marketplace where shares are bought and sold. So you have shares. Somebody else have cash. So them, they don't have shares. We'll know what shares are in the next slide. So me, I have shares. I put them on NSE platform. You want to buy, you come and see the price. You place your order. We match. Shares moves from me to you. So that's how NSE works. NSE provides the trading platform. And NSE in general is what is called marketplace, where shares are bought and sold. Though there are also other capital markets products like government bonds and corporate bonds, that is treasury bonds, treasury bills, corporate bonds, corporate papers. There is also commercial papers. There are also other shares that don't trade directly at NSE. They go through OTC, over-the-counter trading. Like Family Bank, before it lists, right now the shares are trading, but it is over the desk. That's why it's called over-the-counter, OTC. You go to Family Bank, fill in the form. They go to NSE's team that does the matching. Shares are moved from the person who is selling to you. So that's what is called over the counter. It doesn't go through the system. And there are also other many more products, derivatives, which you can invest in. Other capital market products, yes, they are approved by CMA, but don't trade directly at NSE. Those are like Mansa X funds and also special funds. Those ones, they don't trade at NSE, but they are regulated by CMA. Prices in NSE are determined by you and me. That is the person who is selling and the person who is buying. That is supply and demand. Just like the way in the normal market, if let's say you want to buy your food, it is you and the seller who determines the price. If one is selling higher and people are willing to buy, then the prices go up. If there is another person who is willing to sell at a lower price and there is somebody who is willing to buy that price, then prices go down. Also, it could be the other way. There are people who want to buy. There are those who want to buy at the current prevailing price or lower than, maybe with 1 or 2 shillings. If they match, it executes. But in the same market, there is somebody who wants to buy at a very low price. So the person at a low price may have to wait until the seller brings price down. So that's how the matching happens at NSE. Market is purely determined by demand and supply. NSE, even if they have the platform, they don't usually control what happens in trading. NSE have no control. Let me change something here. So NSE usually don't have control. And confirm on the chat, you can see I've enabled something. I'm not sure whether you can see the presentation well. Just confirm you can see presentation. Because that's the most important. Confirm you can see the presentation. Okay. I think we can proceed. I just wanted to confirm, maybe one person on the chat. You confirm you can see presentation. Just waiting for confirmation. And those who have raised the hand, you can know so that I can know when Breda, you're saying no. The rest they are saying yes. Okay, I think we can proceed. Maybe Breda, what you can do, you can just drop out then drop in. But if you can hear me, then it should be okay. So I think we can proceed. So prices are purely determined by supply and demand. Even if other factors come in, those factors now affect either demand or supply. Let me give a good example of uchumi shares. last year around November, December, and early this year, you had seen sometimes price goes up, sometimes price goes down. It has nothing to do with external factors. It's all about demand and supply. People want to buy, then there is limited supply. You broke. So, and since you can see the prices, you're putting at the highest around price in the market. So you broke the board. What you see, it's called market depth, where you see demand and supply. That in our side, we call it trading board or order book or market depth. It has 3 names. The board, order book, or market depth. So all of them, they mean the same thing, depending on which platform you're using. So when demand puts the highest price the sellers can put, remember you broke them. They are subjected to sell at that price. When market opens the following day, remember it opens with the previous day's closing price, then gives a 10% high, 10% low. Again, you are pushing the prices up as demand. Then at one point, there are no people willing to buy. Most people are willing to sell. Again, they broke the lowest price demand can put. What happens? The following day, market will open at a lower price. So it will continue going down at 10%. So that's how prices are determined. And also movement of prices. It's purely on demand and supply. It has nothing to do with other factors affecting directly. Other factors will affect indirectly. Like now, there is that discussion that is there that we are headed to election time. Election will affect company performance. People panic. You come and sell. Again, with the same elections, we have political class who already invest, and you know most of them, they need money for campaign. So what do? They'll come and offload the shares they have made profit. That time you see there are people who are selling. Demand will try to withhold the share, the buying power. What does that do? Pushes price down. So it has nothing to do with direct influence of politics. It is something have to affect demand or supply. Even company performance, it will directly affect supply or demand. And with that, it affects the prices. So that's how prices are determined. And as I've said, market opens at 9:30. Between 9 and 9:30, brokers are allowed to submit orders directly to NSE, which are limit. Limit orders are orders with the prices. You as the client, because you have the client-facing application, either the app or portal, you are also allowed to submit limit orders which have a price. So you are submitting together with the brokers. What are you doing? You are determining the queues. So you submit orders, they are queued. If they are outside the price range, those ones, they are purged out, they are cancelled. Then you can come back and place new orders. But if they are within, they are pushed in, they are queued, waiting now for 9:30 when the first execution happen. Now, for the matching, what happens at 9:30, market orders are also allowed. Remember, within the limit, there are people who also put higher prices than even the supply. Once the market opens at 9:30, remember the market opens with the previous day's closing price. It is the determining factor. Any buying price above that will execute at that price. Any selling price below that will execute at the same price together with the market orders. And those are the people who determines the first prices. After that, now it's just orders that come in demand and supply. So there is no direct influence. Then there are key participants in the industry. First is you as the investor, the people who are buying shares. If you're not there, then there is no NSE, because then companies won't be able to sell those shares. Then there are those shares you are buying, the listed companies, publicly listed companies, which have been onboarded on an NSE's platform. Those shares are onboarded on CDSE, so there is already shareholders who are ready to sell to you. Then comes in the brokers. Brokers are the ones who connect you to NSE to trade. So the role of broker is to facilitate trading and also facilitate settlement. NSE, they provide now the platform for trading. CDSE are the ones who hold your shares. So shares are not with the broker. Shares are held by CDSE. That's why it's called CDSE account. They're in CDSE. But brokers have access to your account, only the accounts they have opened for you. AIB Access cannot see accounts for another broker. So if you open an account with us, you can't see shares you have bought with Equity. You can only see the shares you have bought with the AIB. Then comes in the regulator. Regulator is now CMA. It's the one which oversees everything in the market. If you have any issue with the shares and the broker is not helping you, NSC is not helping you, and CDSC, the last point to go is CMA. If it is dividend, you start with the registrar. Registrars are the ones who manage register for the listed companies. They also manage corporate actions, which are dividends, bonuses, splits, rights issue. It is the registrar who manages. And in this case of today's training, IPO. For this IPO, the registrar is image registrar. Image registrar, I think they are like AIB Access. They are more digital. And going forward, you might see all IPOs going digital. Because image registrar, they have a very perfect system. For those who applied for Safaricom Medium Note Board and also EABR board, it's the same platform. You can tell from the link at the end, it's the same platform. So it is the same registrar, same developer. And if those didn't have any issues, then don't expect any issue with this IPO. So those are the key participants. Alongside that, there is a CASIB. It's an association for stockbrokers and investment bank. Them they protect now the brokers. Usually are protected by CMA, NSE, CDSE. So those are the players in the market. At NSE, companies will list either to raise capital, like what Safaricom did when they floated the IPO in 2008. They were raising capital for expansion. So shareholders, they sold their shares to you. You gave money to Safaricom and they used that for expansion. Also to improve governance and also allow public ownership. Like now for Kenya Pipeline, government is allowing public ownership. But behind it, where does that money go? It doesn't go to expansion of Kenya Pipeline. Government have been clear. It will help it clear public debts. Remember the debts that government owe. It's me and you who are supposed to pay. So instead of the government now adding taxes on you and me, and also prices going up because of taxes, they have decided, since these assets are not giving us a lot of money, why not sell them to the public? They become part of our ownership. Remember, they are retaining, they're only selling 65%, that 5% remains with the government. So public have an upper hand on the company. But remember, it's not a single individual, it is public, all of us. If it is a single individual buying the 65%, it should trigger a mandatory takeover. That's why government cannot sell to another entity. I think when you see politicians talking about this IPO, differentiate between politics and the reality. If Kenya Pipeline was to be sold to an entity outside Kenya, and it owns 65%, government owns 35%, government would cede this 35%. Because that company is the majority shareholder. It triggers mandatory takeover. That's why government saw it necessary to sell to me, you, and the other person who can buy 1, 2, 3 shares, and we don't trigger mandatory takeover. Remember, Kpc is the one that is running your economy. The fuel we are using, it comes all the way from Mombasa all the way to Kisumu, passing through Nairobi and other towns through Kenya Pipeline. It's the one which is supplying to petrol stations. So if it's taken over, it means you are ceding out whatever is running your economy to a private entity. That's why government saw it's necessary. Let's sell it to the public. We use that money to pay debts. Kenya Pipeline is not doing any expansion. So when you see politics outside there, no people are trying to defend themselves because of election. But you as the investor, you need to have the right information and make the right decision. Based on what we learned today, and also you can also do your own research outside this. You can make a decision. Do I want really to buy this share? How will it help me? All that we are covering here. But you can also do extra research. So with that, NSE now gives a platform for long-term wealth building. Why is it long-term wealth building? Remember, the only other long-term products you can invest in, it's pension, because pension you can't withdraw until retirement. You can't withdraw all of it. And pension here is either you have your own private, there is also company sponsored, and there is an SSF for those who contribute. All that money helps you in your retirement. All the rest, most of them, they are short term. Look at government boards and corporate boards. They have limit to the number of years. If a corporate board has been floated for 5 years, after 5 years, that company have to give that money back to you. Unless they float that board again, it cannot be long term. So basically, your money will be returned at some point. Money market fund, if you invest, yes, it is a long term, but remember at one point, that company the fund manager may decide to move assets from one asset class to another. It's only that they don't disclose where they are putting their money into. But most of them, especially the ones which are giving good returns, high returns, Oxford, Mansa X, all those they invest in international stocks and also government boards. The rest, a small portion is invested in NSE shares because NSE is not that volatile. Remember, they have guaranteed you a return. They need to meet that. So the best way is to invest in high returns assets. But remember, with high returns, there are risks. So NSE is one of the products where you can invest long term because shares, when you buy, it is you to decide when you want to sell. Shares cannot go to a zero valuation. If you buy shares today, even if price goes down all the way to 1 bob, at one point it will shoot up. If it doesn't shoot up and continues to fall below that 1 bob, CMA will just suspend that share because shareholders cannot lose their value. Like what happened with Mumias. It has ever gone to 30s, come 13, 6, 3, 1, went to 0 point. After some time, CMA realized this is not a company that is productive. It's being bailed by government. Then after some time, it goes back to the same issues it had. Yeah, I've not moved the slides. I'm explaining the slide. At one point, CMA decided, let's suspend this share so that shareholders don't lose value. So at NSE, you can never lose value of your shares. Price goes up and down. Like you can buy today, in the next minute, price goes down. Like, let me give you an example. If you buy shares today, your portfolio should not show you a profit. If it shows you a profit, then you're dealing with a very volatile stock, which you can do even day trading. It should give you an loss position because of what? The average price includes cost. Market value doesn't include cost. So you find maybe you bought it 10, costs maybe 0.5. So it you post like your price is 10.5, yet you bought it 10. I've seen most investors complain of that. That 0.5 is the cost, so that the profit you're seeing is the real one. So when you buy shares, don't expect to be in a profitable position. Prices will go down, prices will go up. But as I've done in my personal social media accounts where I do training, for those who are on that, I will share those links. I've shown you how you can buy shares easily. And from next week, it's only that I was on paternity leave. I wanted to continue training even in January, but we resumed today. Duta, you can see any slides. The slide should be the one with the title, How NSE Works. That's where I am. Maybe you can drop and join in again. But can you see my face? Just confirm you can see the face. For those who are on, should be either at the bottom or at the top of presentation. You should be seeing two things if you are on mobile screen and my video. The video is because of those who may want to see me. Duta, maybe you can drop then join in again, but it should be visible. But I will also share these notes. So basically, that's how market works. Prices go up, go down, go up, go down. They keep on fluctuating. Today you are in profit, tomorrow you are in a small profit, loss, profit. It is you to make a decision. Do I take this profit? Remember, when you buy shares, and you are coming to that slide, when you buy shares, you can only gain on two ways. Either price movement, you buy low, you sell high. Like Kpc is 9 bob. If it goes to 15, you're selling at a profit. So if you buy low, you can sell high. That's one way. The other way is where a company declares dividend. They pay you that free cash. They make profit, declare dividend, they share that with you. You are a shareholder. When you buy, you are like you are part owner of that company. So they share that with you. You have not sold shares. Those are the only two ways. We are coming to how we have not, Moses, we have not reached that point. I'm starting with the theory so that beginners can understand what you're getting into when you're buying Kpc Ipo. So in stock market, there are only two ways to make money. Dividends, that's one. Number two, capital gains, where you buy low, you sell high. And remember, you can't gain on both at the same time. If you sell, you cease becoming a shareholder. So you are not entitled to dividend unless you buy back. If you are targeting dividend, then you can't sell. So you only need to factor one of them. Either you take dividend or you take capital gains. Or when you are paid dividend the following day, if you are still in profit, you can sell and buy back at a lower price. So we'll come to all that. I'm just going through the introduction. So when you buy shares, you are buying an ownership of that company. You are becoming a shareholder. Only that you are minority shareholder. Remember, there are people who will buy even 20%. They join the government as the majority shareholders. Okay, Musa, I think resolution. Let me turn off the video. I think for those who have who may have wanted to see me should be okay now. Let me just turn off the video, because I know when you turn on the video, the resolution, it may affect resolution. Let me also exit Spotlight. By now, those who could not see the presentation should be able to see Duta, and the rest you should be able now to see the presentation. So the way shares work, when you buy shares, you're buying ownership of that company. You're becoming a shareholder. You own part of that company, depending on the number of shares you buy. Most of us, because we usually buy a small number of shares, we become minority shareholders. And there are those who are majority shareholders, who may have an upper hand in terms of board governance. For us, yes, you can appear in AGMs. When they are doing elections, you can participate and everything else. But you don't have direct say in the company. So as a shareholder, then you benefit when company makes profit, because they may share that profit with you. So when they make profit, they share with you as dividend. That time you are gaining. If they make profit and they are not sharing with you, the other way is that profit they invest. They either invest on a new technology, like what Safaricom does. When they make profit, they usually reinvest. Now for Kenya Pipeline, previously it never used to give a dividend. I may need to see financial results for 2023 and back. But 2024, they gave government part of the dividend. The rest is usually used to maintain the pipeline. So what does that mean? If a company is making profit and not giving you shares, dividends, the only way is that that company is doing innovations, attracting more buyers, that is demand, which pushes prices up. then you can make decision to sell. So, and shares are just classified as assets in stock market. You hear people talking about asset classes. There are shares, there are boards, there are forex, there is CFDs, contract for difference, there is derivatives, and many more. Even metal, gold, all those. In stock market, they are classified as assets, even ETFs. But shares, they grow in value over time if business is performing well. Where am I saying this? Some business don't perform well. You find their share price is low. So those shares you find the price are low, those companies are not performing well. And it means people are not interested mostly in those companies and their prices stagnate way low. A good example is kina uchumi, these cheap stocks that don't give dividend. Those are companies which performance is way below profit margins, which can trigger them to do any expansion. I think on, was it Friday, Saturday, Sunday, there was that announcement on Uchumi opening branches. It's not expansion. They are reopening what they closed. Remember, they have costs to meet. So those are not stocks you can say they perform well and that share value will increase. Uchumi price have been going up and down because of demand and supply. Pure speculation. It has nothing to do with business performance. If you look at Safaricom, at the current status, the price is already capped by government. That you don't even need to be told by anyone. It's capped by government. And that begs a question, does it mean even at NSE level, we usually have control of the prices? I may not answer that now, but you can always read some of these things. Safaricom should be competing with Equity, KCB, and NCBA, where the prices are 60, 70. Safaricom went to 40. Then magic happened, it went back to 28. We never asked ourselves why. Remember the deal for government selling their shareholding has to go through. If that share price is high, it means that deal may face issues if the price is high. Somebody will feel like they are being shortchanged. So government had to make sure the price is below 30 so that they can justify their selling at a higher price to Vodacom. And again, they have to make sure Vodacom on the other side don't complain they are buying at a high price. Once that deal is gone and forgotten and politics are out of Safaricom, because I know between now and election time, there will be a lot of confusion in the market surrounding Safaricom. And it's because everybody knows Safaricom. Anywhere you go, I know you will not find an area where there is no that green color, M-Pesa. So people know Safaricom. People will try to use that. Try to download, downplay what government is doing. But remember, government is not selling the shareholders who are already there who bought in the IPO. They are selling the portion that they were left with when they sold Safaricom during IPO. That price have to be maintained below that. Once that deal goes through, Safaricom may be another cash cow for some people who bought at a lower price and those who are buying at a current price. After this deal, you see the price going up. Safaricom should be competing with those big companies. So how then, as an investor, do you make money? There are only two main ways you make money with shares. Dividends, cash paid to you from company profits without you selling the shares. So this is free cash. Remember, shares are still appreciating in price. You can still sell. So if you're investing in dividend stock, which I always insist on, it means you're earning through two ways. You are getting free money without selling. Prices are going up. At one point, you may decide, let me sell. You also take capital gains. The other way is capital growth, where you sell the shares at high price than your purchase price. If you're buying a share that is not giving you dividend, the only way you can make money with that share is just disposing of. Then you buy back at a lower price. Now you become a trader. So for non-dividend stocks, those are for trading. Dividend stocks are for investment, and you take profit when it is necessary. When you feel now this money I may need to buy, and you may need to ask yourself a question. If I want to buy these shares back, and I back at a lower price than what I bought, that is your average price. That's why I say before you buy shares, even before you look at broker report, their recommendation, first go to your portfolio valuation. If you don't have shares that time, you can check on the broker report. You check what they are telling you to buy, then you make decision. If you have shares, first thing is to go to your portfolio valuation. Check your average price against the current price. If current price is lower than your average cost, it means you're in a loss position. What does that signal you? It is time to add more shares. If you add at that lower price, it means you're pushing your average costs down. When prices go up, you are in a profit position. However, if current price is higher than your average cost, it means you are in a profit position. If you buy at that time, what you are doing, you are pushing your average costs up. Again, reducing your profit margin. That's why before you look at the broker report, get into your portfolio valuation, check whether you're in a profit or a loss position. If you're in a loss position in a company that is strong, that is giving dividend, that is time to buy. Lower your average cost, it increases future profits. And also remember, this company is giving you dividends. So when you're looking at buying shares, first go to portfolio valuation, check. If you're looking at selling, again, back to your portfolio valuation, check. Have I made profit? Am I willing to take this profit? And if I'm willing to take this profit, am I willing to buy these shares back in future at a higher price than my current average cost? If answer is no, don't sell. If answer is yes, then go ahead. So always we use your portfolio valuation as the first guide. Remember, broker reports, they are done by people like me and you. Jackson, you can't hear me? I think I should be clear. Let me repeat the portfolio again. When you want to buy shares, you don't first rely on broker or any research information firsthand. You first go to your portfolio valuation. Check, I have these shares. My average cost is lower than the current price. It means I'm in a profit position. If I buy shares now at that current price, it means I'm pushing my average costs up, reducing my profit. However, if the current price is lower than your average cost, it means you bought shares at higher price, meaning you are in a loss position. Remember, you have not sold. What does that signal you? If you buy shares now at that lower current price, you are pushing your average costs down. When price goes back, even below now your current average cost, you are in a profit position. Just playing with the market. Buy low, reduce your average cost. When price goes above, above now the new average cost, you're in a profit position. You can decide to sell. Like for shares, we don't give dividends. If you're in a very huge loss, it means current price is lower than your average cost. Buy more shares at that lower price. But as long as the company is not collapsing, it's not like Uchumi and the rest, which don't have a strong future performance. Buy more, reduce your average cost. When price goes up and you're in a profit position, just dispose those shares. Go into stable dividend stocks. So long-term investors benefit more than short-term traders. Why? Short-term traders, remember their cost you're incurring. Even if you're doing intraday and we are not charging you one side, remember there is a cost you are paying. That cost into your profit. Again, when you are doing trading, buying and selling, you are not actually factoring the profit you are making. Unless you are recording it somewhere. And you can actually see in the broker statement, the value that is being posted there after sale is higher than what you put. But remember, you keep on trading daily. As a long-term investor, remember you are buying and you're saying, when I get profit that time I can sell, but let me keep on taking dividends. Factor those dividends in. Always calculate the dividends you have received. Include them in your profit. That is a profit that you have. If your portfolio now goes into profit, you can decide. But again, I've said what? Factor out if you need to buy back. Are you willing to take that hit? If you bought Safaricom at 5 bob, you have never sold, and you're selling at 28. Yes, you have made 4 times profit. But when you sell, you want to buy back, you buy back at a higher price than the 5 bob you bought at. Remember, you have to buy at the current price of, let's say, 29. Even if you have made profit, what if that share now goes down? You have lost even what you gained earlier. So always factor that. But in the next training, I don't want to go into details of this because we take a lot of time. In the subsequent trainings, because now I want to resume regular trainings, we'll be running all these. And I see, as I've said, you have seen this is day 15. And I have other videos on my YouTube channel which are not repeating anything I've done before. And I see there is a lot as an investor to learn. I'll share that link at the end for those who want to follow that channel. It is free and all my trainings are free. I don't charge. So you only make or lose money when you do the actual sell. Even if your profit is green or red. If it is red, actually that time you should be happy, buy more. Because the portfolio is telling you prices have gone down. Buy your average cost. If it is in green, don't even try to share those screenshots on social media. You want to show people you have made profit. That is paper profit. You have not sold. What happens if price reverses the same day? You will post another one now with the loss. So what you see on the platform is paper profit, paper loss. You only realize it when you do the actual sale. I always advise before you sell, go to portfolio valuation. Check what you're selling. Are you in profit? Yes, you can take profit. But remember, if you want to come back, there is consequences. If you want to sell and you're in a loss, ask yourself, why am I selling? If it is panic, because the shares are going down, I would ask you, actually unsubscribe from the broker platform. You'll be calling broker every day to ask whether the portfolio is okay. When it is in profit, now get back to broker platform. Never sell shares at a loss. You sell today, then tomorrow something happens, price goes up, you start regretting. What you see in the platform is paper profit, paper loss. When you do the actual sale, you go to the platform, click sell, quantity, price, submit, order successfully placed, then order successfully executed, fully traded. That's the time now you receive money into your account. Either you made a loss or a profit. If you have not sold, actually be happy when it is at a loss, because that stock is telling you, add me more, you lower my average cost. When I go back now to the current, my current average cost, which you are seeing there, I'll be in a profit. That's what your portfolio is telling you. I don't want to go into details of that. Let's get now into IPO. I hope now for beginners, you are okay. Just confirm for the rest whether my internet is okay. I may need to switch. The rest, am I audible or it's breaking? Just confirm whether it's breaking, because I would like it to be clear. Maybe for those who could be having latency. Maybe for those who could be having breakdown, you can try to switch your network off. Just switch your network, then switch on. Because I don't want anyone to lose these. It's very important. So let's get into IPO. So we have known what NSE is, what shares are, when you buy, what you are becoming. You're becoming a shareholder, and how you make money, and how you avoid panicking. Now, what is IPO? IPO short form, long form is initial public offering. Initial, first time. Public, members of our public, the rest of everybody who want to buy into that. Offering, we are inviting you to our company. That's what it means. Initial, first, public, everybody. Offering, we are inviting you to our company. I hope that is a simplest explanation. If it is not, if you don't understand it, you can let me know on the chat. So this is the first time the company is selling its shares to the public. Like Kenya Pipeline, the shares are not in the public, they with the government 100%. So that us as the public to become a shareholder, government is floating 65%. So once you buy, all of us, because they have not limited, they have opened to everybody, that's why it's public, now we become part of that company the very first time. That's what IPO is. The very first time you're buying the first share of that company. So and IPOs happen in primary market. Primary market is where you are not buying from another investor in the platform. You are floating your bid. That is, you are submitting your, I would call it an offer. You are telling government, I'm giving you 1,000. How many shares will you give out of that? That is what is called primary market. Secondary market is where now you, when you buy, you want to sell out. You want to take your money back. That's where NSE comes in, where now you buy from, you sell on our platform or any other broker. So IPOs, primary market. When you hear primary market, is when something is coming first time in the market and it doesn't have existing investors. Why am I saying this? Family bank is coming in through introduction. That is not primary market. They already have shareholders. Like now what I said OTC, that's what the primary market is. You are buying the first time from family banker. Then when they raised, now you start trading at NSE secondary market. So during IPO, you apply at a fixed price. Remember, NSE prices keeps on moving. Like I've seen, there are people who wanted to apply yesterday so that they don't miss. Imagine you have 1 month and the price will not change 9 shilling. The only downside of waiting until 19th, you can use that money in between. That's why it's very important. If you know you can use that money, apply now. If you know you are not always in a hurry of using your money, you have a whole month up to 19th to make decision. Remember, this is a decision you are making. You are putting your money somewhere. It either gives you money through dividend or capital growth. You see whether Kpc is a stable stock to buy in a few. So you apply at a fixed price, 9 Kenya shilling. That price is not changing between now and 9th. When it lists and starts trading, that's when our prices will be determined by demand and supply. So don't be in a hurry to apply. So there are people who are saying, I want to apply before I lose that opportunity. You still have 1 full month up to 19th February to apply. Then after that, shares will be allotted, meaning government have given us 65%. We apply. It might be oversubscribed because for them they are targeting 100% of that 65. If it goes to 150, remember they only floated 65%. So they will allocate the 65%. The balance is given back as refund. So you'll be paid part of the money back. They can say maybe we are giving 80%, 20% to be refunded back. So the amount that you put in, you just multiply by 8, the balance will be refunded back. We'll see all that, how you put the details for refund. Hopefully it's not oversubscribed this time. Then once shares are allotted, they are credited now in your CDSE account. That time you see them in your portfolio valuation. So between now and March, don't even try to look for Kpc IPO on broker platform and also in your portfolio valuation if you apply. They will only be available. We'll see the dates when they are listed at NSE. Remember, right now we are just submitting applications up to 19th February. And I've said the beauty of applying early is only that you won't use that money. So if you know you can use your money, apply early. Otherwise, you have a whole month. It doesn't make difference. Even if you apply now or apply at the end, we'll all be allocated at the same time. The government doesn't say the people who applied yesterday, because it started yesterday, are given the first priority. No. It's not like trading first in, first out. No, all of us together, government wanted 100 billion. We have given government 200 billion. They want to take 100, then refund their 100. Meaning what? Everybody gets 50% allocation, then the rest is refunded. But remember, there are categories. If you look at the prospectus, it has categories. So as a public, they might say for public, we will take 80, we return 20. Then the rest, because they may have applied higher, they are given 50. So you don't need to worry. Then IPOs versus NSE secondary market. In IPO, you are applying new shares before listing, before they start trading. You only pay the exact. If it is 9 bob and you're applying 1,000, that is 9,000. That's what you pay. There is no other cost apart from bank transfer cost and M-Pesa. Broker here is not involved. Even if you go through a broker, they apply for you, they don't charge you. It is a free service. However, for applying through broker, you pay a CDSC fee of 30. For online, you may need to check once you apply if it deducts 30 bob from your M-Pesa. If it does, then you are paying. If you're going through the broker, I believe there could be 30 bob, which is paid to CDSC as facilitation fee. But these days, we don't have manual processes. I believe it is the registrar who will pay that. There is no cost in IPO apart from transfer charges. Secondary market is where you're buying and selling already listed shares. And you can only do this through brokers. NSE, don't be right by anyone. It's only brokers and investment banks who have trading rights. We have custodians bank who can't trade because they don't have trading rights. They only have custody. That is, they hold shares on your behalf at CDSE, but they can't trade. You have seen, and I hope NSE will not get into this social media hype and start hyping people that you can buy shares directly at NSE. You have to go through a broker. Even Safaricom, they are bringing their platform to buy shares. Interestingly enough, there is a broker behind. The first time it was supposed to be IB, and with the usual way the Safaricom works, they wanakuruka, then they go to another broker. That's what they did. Mari was supposed to come to trade at NSE. Mari, the one you see on the app, behind it was AIB. They copied that with another broker, put it under ZD. ZD have not even started because there is technicalities. And this is what even Safaricom doesn't understand. You need a broker at NSE. Without trading rights, you can't execute anything. So that's why brokers come in, and that's why they charge broker commission. NSE have given you platform. That's why they charge levies. CDSC, they're the ones holding your shares. That's why they charge levies. CMA, they're the ones protecting your shares. That's why they charge their levy. There is also investor protection fund. You need to be protected. In case the company goes down, you need to be paid back. That money is there. There is government treasury, which manages the market. That's why they charge 2 Kenya shillings for every 10,000 you use as stamp duty. The reason why I've said that, there are people who buy shares at 0.2 or 1 shilling. Then when you go to portfolio valuation, it is 3 bob. The difference is stamp duty. Stamp duty is actually higher than broker commission. If you are buying small shares, if you are buying huge shares, then you never even realize because it's 2 bob. You might find you have been charged just 20 bob. You won't even notice it because it's high amount. But if you are buying small shares, that 2 bob is a lot. That's why executing one share is very risky. Always, if you want to buy shares, if you have money, buy enough number of shares based on your amount so that you reduce that cost of stamp duty. It is always high. So IPO shares are not sold until trading begins, and trading comes into secondary market where you can sell shares immediately. So IPO is different. It's primary. You are just submitting your application. You are allotted. Shares are listed. Now they come to secondary market where you are at a free to sell. Remember, market opens weekdays 9 to 3. Trading starts 9:30 to 3. The rest of the time, market is closed. So then how does IPOs help you as an investor? It allows you a ownership of a company. Like all those people who apply by 19th February, you are the first one to own shares from the government. You may be buying at a cheap price of 9. When it gets into market, you may find it is trading above 15, 20, and may never go down below that price. Like Safaricom, it came at 5 bob. It has never come down for the longest. So people who are buying now, they are buying at a higher price than those who entered during IPO. Investors, you lock in known entry price. Remember here it is a fixed price 9. You're not guessing that I'll go and get price it's up. No, that will happen after listing. Then gains, as I said, in NSE and in a share, they come from long-term holding and dividends. You only sell when you have made good profit. If you chase prices, and if you see a share that price keeps on moving up and down with 10%, be very careful with that stock. It is ignoring two things. You will buy, you get locked, you can't sell. There is no liquidity. That's what is called liquidity. Ability to buy and sell immediately. All dividend stocks are liquid. Some are others, the ones which are not dividend, some are not liquid. It's not easy to get somebody to sell to or buy from. Huh? So if you see a share that keeps on spiking in price, two things. Either you be locked with that share, you're not able to sell, or it is pure hype in the market, hyping a dead stock, and the next thing, it will be suspended. What happens after suspension? You're at mercy of CMA. Until that company becomes profitable enough to get back to the market, those shares cannot trade. Look at Mumias. So when you see people playing around with some of this stock, always caution them. Suspension is never announced in advance. You will buy right now. The next minute, you see people are not able to sell. You go and try to sell, you think it is a broker platform. If you try to sell a stock and it tells you halted for this trading session, it means that stock will come the following day. If you see shares suspended from trading, then just forget about it. Until that time, it will come back. And it is not guaranteed. Those people who are suspended with Mumia's shares, they will pass that wealth to their children as a dead stock that they can't sell until Mumias comes back, or it is liquidated. It was supposed to be bought out by Rice Sugar, the Cabra Sugar, that is owned by Mr. Rai. But people somewhere saw it necessary to go to court, block people from getting back their money. Immediately a court case comes in, CMA are not involved. They actually don't even look at it. They just continue suspending. And it was just a simple thing. He goes, revalues the company, decides this is the liabilities they have, that is the debts, these the assets, it can't cover. So what do I do? Because I have to, he's a good person. He needs to refund you. He will say, even shareholders, let them get some money. I will buy this company at a higher price. It pays its debt. As shareholders, you're given your money. And you go and invest in other stocks. But somebody just sat there. Most of them, they are, what are they called? I'm forgetting that name. I'm not in politics and I really don't even think of getting there. I'm forgetting the name of those people. It's escaping my mind. You find them in court most of the time. Every time something want to be done, they're the first one to run there. Oh, civil societies. You find they will come and with friends and somebody go file a court case. But remember, when you're fighting this court case, you're blocking so many investors who would have been rescued. So don't play with those stocks which you see they are volatile. If you get in and you're able to get out at a profit, just get out. Buy stocks which are stable. And IPOs will reward you if you are patient, not quick trading. Why? We'll see why Kpc Ipo is not for traders and speculators. And also business quality will matter a lot than hype. And I hope you are running something. So dividends and capital growth, these are things you hear in the market. Dividends, they provide steady income because it is free cash you are being given when company makes profit. Capital growth is when company performs well, and that affects the price through demand. Price goes up and you can sell. And strong companies will have both capital growth and dividend. Why am I saying this? BAT right now, if you are to go today on the online platform for AIB, then you click on it, you look at the graph. Don't look at the market depth, look at the graph. On the app, go to watch list, select BAT, click on it, it opens market depth, scroll where there is a graph, look at how prices have fluctuated within the day. You find there's somebody who bought it for 90 and another one bought it for 440. There's a difference of 50 shillings, which you can easily make profit with. So even these stocks you see, they are stable. They are not stable based on the price you see. Go to the graph, it will tell you. There are people who have already made money. And there are people who have already lost by buying high. But it doesn't mean they have lost. Because that stock can always go up. Huh? And the reason why you find you're executing at high prices, it's because, first of all, you are quick to execute. You want to buy at current price. You have not even checked price movement for the day. Secondly, you're submitting a market order when prices are way high. Remember, market orders, they clear whatever is there. I'll be training these in the next weeks. I also do on that channel I've told you. So if you're interested to learn all these things, it is free. Yeah? Strong companies, they always reward through growth and dividend. Yeah? And in NSE, if you're investing in dividend stocks, they help you when you reinvest the dividend. When you receive dividend, don't use. Deposit back in broker's account, your account, buy more of that share. Keep on growing your dividend. At one point, you have some good stock that dividend is catering for your bills. Ask those who have been using that strategy. These days, they just come to the market to watch. That dividend is the one that's now catering for them. What does that mean? Always target at your retirement. Just say I'm investing for retirement. When prices go up, you can decide to sell at a profit, but you target long term. Why? Shares will always be there. Shares cannot be taken to unclaimed assets. What is taken to unclaimed assets is unclaimed dividends. You gave wrong details. Bank is not able to send you your dividend. Registrar, they try to reach you. They can't. CDSE, they can't. Broker can't. What happens? It is sent to unclaimed assets. Fortunately, in unclaimed assets, as long as you can prove ownership of the shares you have, that dividend will be returned to you the same day you lodge that application. They just tell you, give us this period, you get back your money. So shares and dividends can never be lost. If you have never received your dividend, either it is with the registrar or it is at the unclaimed assets. And that's why you need to go to unclaimed assets UFA website or their code. Use your ID to check whether there is any dividend that have been taken there. Just check. If you have never received, it is either there or with the registrar. If it is with the registrar, you only need to update your CDS account. Tell the registrar I've updated, reinitiate my dividend. They will send you the money they hold for you. Dividends in NSE, I've said, are never lost. Shares are never lost. And when we move to the next world, you can always pass that to your children, either through a will, which they take to the court. Court gives the instructions to the brokers to transfer. Those instructions are sent to CDSE. If there is no will, then the beneficiaries need to share that wealth, agree. Letters of administration are required, and that's it. They open CDSE account. Based on court instructions, shares are transferred. We don't act outside that. Shares cannot be transferred without your express authority or court instructions. Finally, time in the market is more important than timing the market. Don't try to time the market. It will shock you. You buy today at a 20, then you're timing it to go to 25, it goes to 15 and stagnates there. What does that mean? If you buy today and it goes to 15, you bought at 25. Give it time. Don't be in a hurry. That 15 is also telling you something. Buy those shares at a lower price. Lower these 25 you bought at. Push it to 15 or 16. We have potential of going back to 20, not even 25. There is a 4 bob you have gained, and you bought more shares at a lower price. So that's how you play with the market. NSE, if trained properly, you realize you have a very high chance of making money. NSE, you can even make 1,000 times. Leave alone those rates we are being given there. 13%, 18, 20 in money market fund. NSE, the people who bought 2023, 2024, when we had the two finance bills, when prices went down, right now they have made 200% in gains. You only need to play the market. And I've said 2023, 2024, you know what happened. That's when you even knew this new term Gen Z and millennials. Because of that finance bill, because it would have crippled most of the companies. People panicked, want to sell, foreigners want to exit, prices shoot down. Stagnates there. People took advantage. They realized market is undervalued. They bought. Right now, they are just wondering, do I take profit or do I still continue waiting for a dividend maybe for the next 20 years before they can recover this profit? What does that mean? Again, what I said, before you sell your shares, go back to portfolio valuation. Before you take profit, always check. This profit I'm selling at, yes, I'm gaining, I put 100,000. Right now, I'm worth 500,000. That is a difference of 400,000. Huh? Before taking this 400,000, how long would it take this dividend to pay me this amount? If it is 5, 6, 10 years, don't even try to sell. You have time after 10 years. What will you do? Will you buy at a higher price that time? Remember, dividends keeps on coming. And maybe at that point, prices have shot up. Maybe even the company, because of wanting to maintain its valuation in the market and also liquidity, they have done a split. Prices go down. Shares are multiplied by say 10 times. Price goes down by 10 times. It goes back again to that same price. Remember, your shares were multiplied. So if you start thinking NSE in that perspective, then you would want to be in NSE stable dividend stocks. So that begs the question, is Kpc worthy investing? It has monopoly of infrastructure. Again, whatever it is operating is what is supporting the economy. Unless now all vehicles move to electric, all generators move into electric, but then generators are used to back up electricity unless they go to solar. Its business is stable, regulated, fully regulated by government itself. It is treasury selling new shares, not individual investors. Government is still retaining 35%. It's not ceding that out. They started to give dividend to government. They gave treasury last year 7 billion in dividend. But again, this is not a high growth stock. Don't come expecting you're buying at 9 and you sell at 50. It won't happen now. Even Safaricom took time. That's why I said long-term investors and suitable for long-term income focused investors. If you have ever bought Kengen, you are dealing with the same stock. Remember, Kengen dividend is usually low, but for those who hold long-term, they have seen gains. Huh? So we come to performance. I'll go through this quickly, then we go to our application, then we go to Q&A. This is just the financial performance for Kpc full year audited 2024. In terms of revenue, it generated some good revenue in 2024. And this was purely from transportation fees. And it's not just dependent on the fuel prices. So this is not a company that is depending on when prices go up, that's when they are making profit. No. Remember, they're also dealing with exchange rates. They're importing, then even in Uganda, they're also transporting there. I believe they could be the one supplying to Uganda. There is exchange conversion, which they usually, most of these companies, they usually gain with. And I believe most of the people who deal with Kenya Pipeline, they pay in dollars. So right now, dollar is low. When dollar goes up, Kpc, I may be sure, they convert that into Kenya shillings, they gain. So they are gaining through many ways. Stable demand, well, fuel, I don't think everybody is relying on the fuel. And you can predict, their revenue model is always predictable. You can know when they are making profit or loss. In terms of profitability, they made some good profit. Profit after tax, 6.87 billion, and purely driven by high throughput volumes. That is their sales. There is no government subsidies. If you go to their financials, they are there in the prospectus. There is nowhere you see government subsidies, like what used to happen with other sectors. And that's a company you want to be in, because profits are coming from pure sales, chances of getting dividend. In terms of cash flow, they have very good cash flow. As at close of 2024, they had 6.5 billion cash and cash equivalent. This means it's cash in the bank and other assets which can be easily moved. So this means operations, expansions, loans, they are fully funded internally. They are not borrowing. And if they borrow, you realize they are using the same cash to pay. If you look at their cash flow position statements, you find part of the debt that they paid was paid from their cash. They didn't borrow from anyone. I've not seen them do a corporate board. I've never seen government bailing them. So they are not relying on new borrowings. In terms of debt position, it's not like Akina KQ. They reduced their loan from 6.7 to 2.5 billion in 2024, paid from pure cash generated that year. So debt is declining. Meaning, in near future, then profits are high, dividends. That's what we are targeting. Balance sheet. We always buy shares without checking some of these things. If you go to balance sheet for Kenya Pipeline, you find shareholder equity and liabilities added together. They equal to assets, meaning what? Their asset base is strong. It can, if the company was to be liquidated, assets can be sold. They pay their debts, and shareholders, they get back their money. If you find a company where shareholder equity and assets added are equal to their ability, move as fast as you can. What that means is assets can be sold. They will not be enough to pay debts. What do? They come for your shares. So I hope that is clear. Now we come to key dates for IPO. I'm coming to this, then we go to the application process. And I hope I've not taken more time on theory. And I hope you're also learning something. So IPO opened yesterday. It came as a shock even to brokers. Nobody expected. And it will run all the way to 19th February. So between now and 19th February, you can make your application. Don't be in a hurry. Prices are not changing. It's 9 fixed between now and 19th. So don't be in a rush. Sit down, analyze, make decisions. When you are ready, apply. Allocations results will be announced on 4th March. So 4th March, check announcement, see what have been allocated to public. Because if there is full allocation, it means whatever you applied, you get in full. If it is partial, then part of that money should be refunded back to you. Then shares will be credited on 6th March. So in CDSE, they will appear on 6th March. In broker platform, they will appear on 7th. Because broker have to receive a file and on 6th. Actually, they will appear on 9th, because 7th is a week. Yeah, let me check March. Yeah, March 6th is on Friday. That's when CDSE will load at 5. So in broker platform, they will appear on 10th, Tuesday. So Monday is the time to reconcile. Broker gets them on 10th and updates your statement. So from 10th, if it is a good broker, you should start seeing your portfolio there. And trading begins on 9th March. 9th March is when? Let me see from the calendar. 9th March is on a Monday. So that Monday, the first shares to trade, they form the opening price. And that's because our platform gives you real valuation. You start seeing whether you're in profit or loss based on the 9 price you buy today. So don't be in a hurry. Those are the dates. I will share these notes. But I usually share them on my personal platforms. So you have realized I'm going outside what you're supposed to know. Some of these things, I don't think you'll ever see any broker trading, even those people who do training outside. But for me, I've decided to let the market be open. Why would it be there if investors don't know these details? So if a broker cannot give you a platform where you can see from 10th, 11th, then you will lose a lot. I've said, and I'll keep on saying, a broker should connect you to NSE by 9 a.m. System closes at 3. If a broker cannot connect with that, you lose opportunities. As you continue running, you see how you can take advantage of prices you buy low, sell high. It's the same thing with IPO. When it is on 9th and start trading, there are those people who may want to sell. That time you can come and put a price of even 20. If you're lucky, you get. Remember, as I said, there are people who don't care. They come and put market, buy me at any price. Maybe there are no people selling. It's only you. You had put a 20 and it is around, maybe around. It will come and clear with your price. So shares will not be traded before trading starts. So right now it's just application up to 19th. You won't see anything between now and 19th. Allocations are done. You see your shares on 9th, 10th, 11th. Then from 9th, if they are available, now that time you can start buying and selling. So why would those numbers we have discussed for financials matter? Revenue will show whether business is stable. You want to be in a stable business. Profit, whether there is a ability to get dividend in future. Cash flow confirms whether these profits are real. Remember, because of accounting adjustments, those profits you see there are never real. Cash flow is what tells you whether a company is making real profits. If they are making profit, but in their cash flow statement they have a negative, it means that's not a company that it is relying on debts, even if it is reporting profits. So never rely on accounting figures. Then raw debts, remember, profits high, future dividends. Financial strength, it means this is a company that can stand in the market for the longest. So what should you focus on? First, always focus on business fundamentals, not price hypes. This means instead of concentrating so much on technical analysis, focus on business fundamentals. Fundamentals is what you can see there. Why these numbers matter. All this is what you check at the fundamentals. Technical analysis is where you start now checking at PE ratios, price to earning ratio, dividend yield. All those, they are affected by some of these accounting adjustments. That's why technical analysis is just a guide. But fundamentals, they tell you whether you can buy or sell. Then focus on cash flow, not what is being said there. Long-term holding more than short-term. Don't even think of short-term. If you're getting into short-term, Kpc Ipo, I can tell you openly, it's not for you. Unless you're targeting the very first day when it opens. Price range allows you to put the highest price. Place a sale order the very highest price you can. Leave it with a GTD of 1 week. I've said there are people who may rush in that time to buy at market. Remember, market clears what is available. If there is nobody else selling above you, or if they are buying more shares than what the person above you is selling, remember they clear even you. And focus on dividends. For NSE, focus on dividends. Prices come secondary. As you wait for dividend, prices are moving. If you're in profit, I said it is you to make decision. Avoid speculation, and most important, avoid social media hype. Most of these people hyping stocks on social media, they hardly understand the market. Myself, I have been in the market since 2007 during Kenya IPO to date. 20 good years. I can tell you in and out. For those who are asking whether they can get the recording on the email, when you come back to this, the link that you joined with, I think you on any training you usually see the chat section. I will share that link there where I will upload the recording and also the notes. So don't worry if you're in a hurry. Once we are done with live application, you are free to drop because that time now I'll go to Q&A. So the expected results after, and these are estimations. I don't quote me, but this is what you'd expect. They gave government 7 billion divided by the number of shares that are there. How much can you get in dividend? Because dividend is per share. It's between 0.35 to 0.45 if they give. If they make higher profits than that, then dividends will be high. Remember, price itself can tell you. 9, number of shares, 100. It can tell you who they are targeting. Yield should be around, based on the IPO price, should be 3.5 to 3.9 to 5 in terms of return. But it will depend. This is based on last year's dividend that was given to government. Because ideally, government is ceding that to you. Next year, they might make even higher. That's why it's very important you analyze even previous years. How much have they earned in terms of profit? If they gave dividend, how much? If they only gave in 2024, that is the time you need to be cautious. Why did they do it? Was it for the IPO to look profitable or what? So your returns for Kenya Pipeline will likely be driven by dividends. In terms of price movement, these are not a stock I expect to be that volatile. Remember, politics will still be there, even if they are floating to you. Before you do the next AGM to elect the board, it's the government which will be running this whole thing. So some of the common IPO mistakes to avoid. First of all, don't try to take a loan to invest. A loan have interest to pay. That interest is higher than the dividend itself. If loan you are paying at 10%, remember dividend you're getting at 3 to 5%. Basically, you're actually kidding yourself. 14 minus, you have 9% you're losing. And remember, these entities which are selling these loans to you, they don't really care about you. All they care is, I have targets to bring in for loans. I get paid my salary. You will end up losing. So don't try to take loans with any entity to buy shares. Never even try to do that. Interests are paid monthly. Principal is paid monthly. Dividend once per year. Do your simple mathematics. If you want to borrow, it's up to you. But remember, anyone selling loan to you is actually killing you. They will come. I've seen, sorry to say this, I've seen it in some social media. People trying to sell that idea. My friend, the only thing those people who sell loans to you care about is what you pay them back. Try to default that loan. You see what will happen. You all know what you'll get. You have seen that meme that keeps on circulating. The people who are giving you loan, how they look like, and the people who are coming for that loan, how they look like. It's the same thing. And here you have dividend coming just once in a year. Even if you sell that share in a profit, loan has already been calculated, the interest that you're paying. For Kenya Pipeline, and then a share. That's why I said I can't post this on AI, because I know there are things that are coming. Let me check on the attendance. Just a minute. I may be... But either way, it's a price I'm always ready to pay. But give me a second. Just a second. I'm just checking something here. But I'll check after this. Let's continue. So basically, don't expect instant profit after listing. Unless you use that strategy, putting high price, leave it there. Then panic selling due to short-term price movements. IPO listing goes to 5 bob, you want to sell. Remember, you are selling at a loss. Don't be in a quick rush. Don't invest based on social media. If people say I'm not buying because I've done my analysis, PE ratio is this, dividend yield is this, that is them. It is you to make decision. It is a share that is capable of giving dividend, price growth. Invest long term. Don't put all your money into IPO. There are also other good stocks. Say, put like 20,000. If you have 100,000, 80, come and buy akina BAT. Enjoy dividends when they last. Don't put all your money into IPO. We are coming now to live application. I just go through this slide. I believe, yeah. This is the last slide. Now we go to live application. And I believe now when we are doing application, you know what you are getting into. I believe, and if you have not understood, again, I'll show you my number, reach out. So first of all, you need an active CDSE account, which you can open even today. Even that 19th, you can open. With the IB access, you can open through AIB DigiTrader. If you have opened, you have not received your CDSE number, reach out. I know there are those who have been frustrated, but I always say, when we wake up in the morning, everybody have a reason of reporting to the office. So for me, just reach out. I'll help you get your CDSE number. If you don't get it the same day you said, be sure it can't. For me, it doesn't take more than 3 days because I'll just process for you. You get it. Like there are those who sent between Thursday last week and today. You get them after this training. So that you can make your application. Immediately you get that email with your CDSE number. Your account is active at CDSE. Go ahead and apply. Applications are going through the official online IPO platform. Let nobody else tell you. The one that I will share that link here is the only platform. There is no other. There is also USSD. It's there in the prospectus. Any other platform, please don't lose your money. It's only one platform from Image Registrar. Any other platform, don't try. Then enter personal and CDS details correctly. Make sure they are correct. Otherwise, application will fail. And the reason why I said image registrars are the best registrars you ever get in the market. They have automated full process. It is validating your CDSE number at CDSE. So you can't be wrong that you're paying to a wrong platform. Huh? And once you make payments, make sure you confirm that you have submitted your application. Then your work is just wait. Don't be in a rush. We said what dates are here. If you apply today, you just relax. Actually, that time you can start taking a walk until 4th March. So don't be in a rush trying to find out whether you have been allocated. There is still a lot of time until 4th March. Shares will be credited into your CDSE account. Then trading will start on 9th March. That's when listing date. Listing means the shares have been provided at NSE for actual trading, where now you will sell to others. So the first person to sell that day, I think the government may do something and show you, maybe if they are very serious with this IPO, they can show who bought and sold the first share in the market for Kenya Pipeline, because that is the time the first share will trade at 9:30. And they are the first people to set the opening price for Kenya Pipeline shares at NSE, which is different from the IPO price. As a takeaway for this training before we get now to actual application, IPOs are long term. Never be told by anyone it's short term. Huh? Focus on business quality, not excitement. Huh? In the NSE, patience and discipline pays you. Kpc is stable and income will stock. Huh? And I always say, and it is my slogan going forward, run fast, make decisions second, profit will just come after you. Learn the market, how it works. Don't try to guess. Huh? Previously, people used to lose because there was no trainings. These days, for you to lose, then it means you are making wrong decision. So before you make decision, understand the market. Profit will just come after you. With that, let's get into the link. For account opening, for those who want to open accounts with AIB Access and DJ Trader. As I said, I work with AIB Access Africa. I'm the head of product development and innovations. Download that AIB DJ Trader from App Store and Play Store. I've put on chat. Let me also share the link to our online portal. Everything is self-service. Let me share that link. You can bookmark it. Just waiting for that to open. Oh, it is here. Copy. Paste. Please send us your contact. Got roast 0723384775. If you call and I don't pick, I may be, because these days I'm acting like I'm the one who is running customer service. My number, that's why most people are calling. Huh? And if you have been frustrated before, apologies on behalf of our team. Huh? It should not be happening. It never used to happen. And I hope going forward we change. You can reach out even on WhatsApp. Huh? I will help you. Offshore stock market, not yet. I'm coming to Q&A. I'll tell you what is there. So I've shared the link to open account. You just got to open new trading account. If you download the app, again, you skip the first screen. If it doesn't have the skip button, click on login. It goes to another screen where it again asks you to log in. If you check on it, it has open new trading account. If you have an account with another broker, you use the same option, open new trading account. Submit your application. Let me know your ID number. If it's the first time you're applying, I can help you get the CDSE number. If you're able to call the office, better. You can call, get your CDSE number. Once you get the CDSE number, you're free to open. For those who are saying, I repeat, let me share this